Could it be that Canada's frenzied housing market is actually starting to calm down a bit? Got some numbers today and a national scope from the Canadian Real Estate Association showing that from March into April, we did pull back on the number of homes changing hands, about 12.5% pullback. Of course, 1 month is not a trend make. Where might we be headed? Let's bring in Samantha Brookes, CEO of Mortgages of Canada. Samantha, great to have you on the show. And I want to start there. I have settled on the word calm. I'm comfortable with saying calm and not cool just yet. How are you seeing the market?
Well, it is, I would say, cooling a bit. The only reason why
you'll go as far as cool.
Yeah. I'm going to go as far as it's cooling just a bit. Like, the temperature is coming down, so that's why we're seeing less transactions. But at the end of the day, you know what? It's only been a month, so I can't really say that this is going to continue because we're still in lockdown and we're in a stay-at-home order. So those things are in place right now. Once those get lifted, we don't know what's going to happen in the market. So we have to always be aware of what is next. However, I have to say this, there's also buyer fatigue in the market. So we know a lot of buyers are actually fatigued from going out house hunting and constantly having to go through bidding wars. And that is a major issue for home buyers, especially when you're having to put in like $100,000 or $200,000 over asking. It becomes an issue. And then you're not winning these bids. So I think a lot of what's happening right now is that consumers are kind of taking a step back, just waiting, probably until the restrictions lift, and then they're going to be out shopping again. But we'll see, because we know the summers and months are always very busy, but it's hard to tell. It's hard to predict what's going to happen right now.
Yeah, when you take that buyer fatigue, and I've heard that from a few people like you who are on the ground on the front lines of all this, and then you add in the fact that the stress test will get a bit tougher in a couple weeks' time. Not monstrously tougher, but a little bit tougher. That seems to be perhaps another screw that has been turned by policymakers. Not a huge one, but that could perhaps make some other people step back and say, well, now I can't afford the house that I thought I was going to go after.
Well, some people will say that, but then at the end of the day, when you really want something, you go after it and you get it, right? And housing is so... It's a Canadian dream, just like it's an American dream. It's a worldwide dream. So people want to own a home for their families. And so when you want to own a home, you will do everything under your power to make sure that you get that home. And so people could just throw on a parent or parents on the application and make it happen. So whether or not like the stress test is there, you and your spouse may not be able to afford it. But if you throw a mother or a father on there or a sibling on your application, you'll still be able to afford that property. So I don't think it's really going to be that much of a deterrent, because the cost of borrowing is actually still very low. With the interest rates being so low, it doesn't really cost you much to have a larger mortgage. The only time I truly believe that the housing market will actually cool is when the Bank of Canada actually increases rates. So once you start seeing those rates go up, you're definitely going to see more of a cooling. I don't think you'll actually see like a bubble burst. Like I do feel we're kind of in a bubble, but at the same time, because there's a housing shortage, that bubble may never really happen until we actually catch back up with the housing shortage. Do you know what I mean?
Okay, you used the word bubble, so I want to dig a little bit deeper in that. It is true, right? People talk about asset bubbles, and there's always a great debate of whether this asset, that asset, this asset being housing is in a bubble. Some suggest the mindset you were talking about, that people do whatever it takes to get into the market, means we're in a bubble. But just because you're in a bubble, as you said, doesn't mean it's going to burst anytime soon. Still, it puts us in territory, I think, that make people a little bit nervous. I mean, from your point of view, what would be an ideal market? I mean, a market running this hot? I know it gives concern. It frightens some people in the industry.
Yeah, it does. It does for me too as well. I'm just like, I'm looking in the future. When will I be able to buy an investment property? When my daughter be able to buy a property? It's just, it's becoming a little bit too much. When we start to see these double-digit growths come back to single-digit, then I think that's kind of where we would like to see the market. But right now, it's still overstimulated for sure. And there is a lot of risk, but that bubble that we're expecting, I don't think it's going to happen. I do think we're kind of in one, and if it did, the bubble will burst only if the interest rates jump really quickly, which I don't think the Bank of Canada is going to do.
Now, the Bank of Canada at least opened up the door last month to the fact that maybe they end up starting to hike rates in the second half of next year and not 2023, which had been the accepted wisdom. From what you're seeing on the mortgages side, did that do anything to change people's mindset? There's been a lot of talk about the fact that the Bank of Canada at least has to snap this idea of cheap money forever. Did that do anything?
I mean, again, people want to buy a home, right? Home ownership is really important. At the end of the day, the interest rates will go up, they'll go down, the buyers will adjust the way that they're going to get into the market. At the end of the day, the market will do what it's going to do. You just have to think long term. If you're going to buy now or buy later, whether you buy high or you buy low, it has to be a long term. So that way you're able to recoup your losses. If you bought too high now and then there is a bubble, then you're actually going to be okay if you hold on to that property for the next like 3, 5, or 7 years. If you're buying it now to sell it in the next year or two, then you might actually take a loss if there's some correction in the market. So those things you have to be aware of. And hopefully people are looking for the long term. Anything that you buy and hold, you're always going to see growth. So if the bubble happens, if you're not moving, then you're okay.
I want to ask you before you go then, how about these people rushing into the market, waiving conditions, perhaps not getting pre-approvals before they go shopping? There's things you need to do, right, before you go out and buy that home.
Oh, Greg, I tell you. So, yes, we see a lot of people going into the market without getting pre-approvals, and it scares me as a professional in this industry because I see a lot of people on the brink of losing and have lost their deposits. And because realtors and sellers are actually requiring buyers to have more of a deposit, they are losing a lot of their savings if they do not do a pre-approval before they go out house hunting. Another issue I'm finding is that some people are actually getting pre-approvals from other brokers or other financial institutions, and then come time almost to closing, the bank drops the ball, or the lending institution drops the ball, or not even the broker, but whoever was financing the deal and gave them the approval actually drops the ball close to closing. And then people lose their money anyway. So I always tell people, you know what? A pre-approval is not a guarantee to an approval, and an approval isn't guaranteed that you're going to close. So always be ready. So 5%, great. You have 5% down, you're a first-time home buyer, hopefully everything works out for you. But if you have 20%, you're actually saving yourself a lot of risk. So right now, this market for everybody, I don't think it's really great for the average consumer. There's just too much risk. Prices are just a little bit too high. Bidding 100, 200,000, 300,000 over asking if you don't really have that money, it's really too risky.